Finding deductions is going to save you so much money, it's not even funny. Hi, my name is Brian Nguyen. I'm a tax advisor with CleverProfits, an online accounting firm, and today what we're going to do is teach you guys about deductions against your business income. Now, if you've watched my last couple videos and you know how important deductions are, because deductions are going to help reduce your tax liability significantly, whether it's income taxes, self-employment taxes, state income taxes, every dollar of deduction counts, and we're going to try and find as many as we can in this video that may apply to your online business. Now, deductions as a concept are pretty simple. As you've probably heard before in my previous video, we're really looking at net profit when it comes to determining what your tax liability is going to be. That's ultimately reported on your return and then translates to how much you're going to owe. Okay? And net profit is really the sum total of your revenue in your business minus your expenses in your business. And when Congress came up with the vision for tax law, they were really looking at profit from a business as ultimately what was going to be taxable to you as a person or to a business at the end of the day. Okay? And that just makes sense, because even if you're making revenue from clients, it doesn't necessarily mean that you should be paying taxes on that revenue, because you also have expenses incurred in order to facilitate the creation of that revenue that should really not count against you in determining what your taxes are. So that's where deductions come into play. They are a legislative concept that just allows you to reduce your overall revenue against these expenses that you're incurring, which can then translate to a massive amount in savings. So I'll give you a hypothetical example, kind of similar to the one that we had in our previous video series. For example, let's say you're making $500,000 in revenue from your business this year, and you incur about $300,000 of expenses in total. Well, your net profit is $200,000, and ultimately when you file your tax return, you're probably going to have somewhere along the lines of $300,000 in profit reported from a combination of $500K in income and $300K in deductible expenses that you've recorded on Schedule C of your tax return or on your business return. And really the key is trying to maximize as many deductions as possible. Now, the challenge isn't so much seeing what you've spent in your business. As long as you've kept pretty good and accurate accounting records, you shouldn't have any problem in finding a lot of the expenses that you're incurring that will ultimately translate to a deduction. The problem is more so trying to find the things that don't show up in your business that we want to plan for and create a deductible opportunity to then offset in your income. So we'll talk about the things that you're probably going to be spending in your business and how that's going to translate to a deduction. But we're also going to talk about things that you probably don't see that you might be incurring as well. It's going to significantly reduce your tax liability even further. So if you're running an online business, I'll talk about some of the key things that we see online business owners incurring in their business that are ultimately deductible, and some things that you probably want to consider as well. One of the big items and facets that we see in the online business space is for software. Software is everywhere. Whether you're running a digital marketing agency or if you're a coach or a consultant, you probably use a combination of software in your business all the time in order to actually run your business and save you time and energy to do the things that you want to do. The most important part is probably serving your clients or your customers. And so if you've paid for software, whether it's for G Suite or whether it's for ClickFunnels, whatever it may be in your business, you can pretty much guarantee that those payments are going to be deductible expenses against your business income. It's kind of a no-brainer. It's pretty much a given that you're going to get a benefit for it. Another thing that we also see in the online business space is if you're paying for advertising, whether it's Facebook ads, Google ads, YouTube ads, you name it, you've probably spent it. If you've incurred it, you can probably claim a deduction for it. And those are really simple and clear. Hey, you spent it, you paid someone for it, it relates to your business, you're making money from it, but you're also paying out of pocket, you're going to get a deduction for it. Those are the easy ones, because those are items that you can easily see hitting your bank account as expenses that are translating to deductions. And what I also want to do is talk to you about a few items that might be deductible or might not be deductible depending on the character and nature of the expense. One thing we see, again, in the online business space, it's heavily prevalent, is coaching and training and education. Okay? If you've ever paid for a coach providing a service, or if you've ever paid for a training course, the big question is that a deductible expense? And the answer is most likely going to be yes, you can take a deduction for it. Now, there's a pretty key provision in the Internal Revenue Code that makes sure that in order for you to claim expenses relating to training and education, it can't technically qualify you for a new business or venture. It can only help enhance your existing skills. So you want to make sure if you're paying for these training courses, are they enhancing what I'm already doing, or is it qualifying me for a new career entirely? Because if it's the latter, it might not be deductible under the current Internal Revenue Code. However, if you're paying a consultant to teach you how to do something in your business, that's probably going to be more like a contractor expense in the eyes of the IRS, and that will most likely be deductible. But again, you want to pay careful attention to who you're paying and why you're paying them and what value you're deriving from the services that they're providing you. Okay? So we talked about advertising, we talked about software, we talked about training and education. Another big one is contractors. Hey, you get a deduction for contractors that you pay. So whether you're hiring people on Upwork or you're paying for them directly through PayPal or some other service, you do have the ability to deduct payments made to contractors, whether they're in the US soil or whether they're foreign and overseas. And that's really important, of course, because they could be a real important facet to your business in delivering clients your services and whatever offerings you have. And that's really important. There's special, unique things that you probably need to do associated with reporting your contractor payments correctly, but that's outside the scope of this discussion in this video, and we'll talk about it sometime in the future. Here's another big one, travel expenses. So generally speaking, travel can be deductible if you're traveling specifically for business. Where it gets a little gray though is if you're traveling for a combination of both business and pleasure. Generally speaking, airfare to a conference is going to be deductible. Hotel stays for a conference are going to be deductible, or events. Meals associated with travel are going to be partially deductible, which I'll explain in a second. But if there's any personal element to your travel for your business, it might not be deductible, and this is really sensitive. And so the key here is understanding the facts and circumstances around your travel, where you were staying, why you were there any personal elements, and if so, what were they? And the more personal it is, the less likely some of those expenses are going to be deductible. So you have to be very careful with travel expenses because IRS heavily scrutinizes it if it's pretty significant. The other thing that you want to pay close attention to is meals and entertainment. As of now, entertainment expenses are no longer deductible. So if you're paying for client entertainment, whether you're buying tickets to a game or you have a box office suite, which is rare in the online business space, but it's possible, then those entertainment expenses are not deductible. However, if they are marketing or advertising related in terms of just trying to generate business, it's very possible that that falls outside the scope of your traditional entertainment costs where you're entertaining someone who's already a client and instead would simply just be an advertising or marketing expense. So we want to understand the nature of what the expense relates to because it could possibly be deductible, could possibly not be. And lastly, meals and entertainment is also kind of a gray area in that generally speaking, no matter what your meal is for, if it's business related, you're not even getting the full deduction. You get a 50% deduction and the other half is disallowed. Now, one thing that I want to be very clear on is that there's a distinction between a business meal and a personal meal. A business meal is a meal that you're having with a client or a prospect or someone internally in your organization that's business related, whether it could be networking related. However, personal meals on your own. Personal meals are never deductible. If it's just for yourself, by yourself, you don't necessarily get a deduction for that because it's not really relating to the business, and the IRS doesn't want to give you a tax benefit for paying for a meal that you would have paid for anyway unless it relates to business. So there's a pretty clear hurdle that you're going to have to hop over. Whereas a business meal with an acquaintance discussing business is a little bit different. And you do have to make sure you keep track of your receipts and also the attendees who are participating in these meals with you. And that's really it. I mean, those are a handful of different deductions that you're going to incur in your business. Some of them more sensitive than others that you want to pay closer attention to, working with your accountant on identifying what is deductible and what's not. Lastly, I want to go over a deduction that most people miss, and that's the home office deduction. Now, the home office deduction is amazing because especially if you're running an online business, you're probably working out of something like a home office already, and you might as well take a tax benefit for it. And the home office deduction is simple. If you have a very clear and designated place of work specifically for your business and exclusively for your business, that is, it can't be a guest bedroom that you repurposed as an office space while keeping a bed there, then you can claim a partial deduction to the extent that you have square footage allocated to that business space. Quite simply, you can pretty much total your rent, utilities, insurance, whatever you're paying for your apartment or your house. If it's the case of a house, you're looking at interest and property taxes, not principal. And based on the allocable square footage of the space that you're working compared to the total square footage, you can take a deduction for that based on the ratio and reduce your overall income and get a tax benefit for it. And if you're paying a lot of money in rent and you have a very big space for your office, that deduction can be significant and in the thousands. And so it's not something you want to scoff at and ignore, because it can be pretty significant and pay for itself. So again, you want to take advantage of every nook and cranny, look in there, try and find whatever deductions you can. The reason why deductions help so much is not just for the income taxes, but also the self-employment taxes. Self-employment taxes, like I mentioned before, end up being about 15% on the first $130,000 of your self-employment income. So if you can reduce that by even $1, you've just saved 15 cents on top of the income taxes. And that can be a huge tax savings. Even finding $20,000 in deductions can translate to $5,000 to $10,000 in overall tax savings, depending on what your marginal tax bracket is. It can be very significant. And that's the importance of trying to find deductions. So hopefully you understand the nature of what deductions are, how they help offset your income, how they help reduce your overall tax liability, and what deductions you can take on your business return or your personal tax return associated with what you're already doing in your business, specifically for online businesses. So whether it's software, advertising, contractors, travel, meals, and entertainment, which is not deductible, training and education, home office deduction, these are all things you can take advantage of to hopefully reduce your tax liability by a significant amount and save you a bundle. So hopefully you got a lot out of this. This is a really exciting topic. You want to work with your accountant to maximize your deductions and minimize your tax liability, and really look forward to seeing you in the next video. Thank you. If you liked what you hear and you want to take advantage of more tax strategies, we have so many more videos on the channel that are going to be coming out explaining how we help our clients save tons of money. And you can check out the videos by hitting that like, share, subscribe button and go into the next one right here.